Live stream. You're watching Opening Bell with me, Lovisha Darad. Well, it's a brand new week. The GIFT Nifty is hinting at a negative start. Even the pre-open rates are pointing out to a little bit of a pullback after benchmarks hit record highs every single day last week. Now, we have had a mixed global handover. On Friday, we saw US markets end on a mixed note, whereas today morning, US futures are indicating a flat trade in this morning as well. Asian markets, they look quite interesting because Japan's Nikkei 225, it has tumbled over 4% after Shigeru Ishiba became the country's prime minister. Now, the nervousness in the Japanese markets have prevailed because Ishiba has previously indicated a hawkish stance, and he was not okay with the accommodative monetary policy and the interest rate easing. However, in the recent interview, he was in favor of it, and he has indicated that he's okay with the accommodative monetary policy stance, and because of which yen also saw a bit of a breather against the US dollar in today's trading session as well. But now coming back home, this week it'll be a holiday truncated one. Wednesday will be a market holiday as India celebrates Gandhi Jayanti. But today we will be watching out for SEBI's board meeting. The board is planning to mull strengthening of derivatives framework. But we'll talk about it later in the segment. But lots more lined up in the show. Let's see how the week pans out for the markets. We'll also be addressing your stock related queries. So keep posting them in our live feed and we will try to address them before 9:30 a.m. with our technical expert. But first up, let's take a look at the top headlines at this hour. Wall Street ended last week with third straight gains. The S&P 500 and Dow Jones ended last week with 0.6% gains, while tech-heavy NASDAQ Composite rose nearly 1%. A mixed morning for Asia-Pacific markets. Japan's Nikkei 225 fell over 4% as nervousness around rate hikes grew on Ishiba's win as Prime Minister. Australia's S&P 200 index hit new all-time high, and Chinese markets also rose as manufacturing data contracted less than feared. Meanwhile, the GIFT Nifty is indicating a negative start. Oil prices rise as increasing concerns of potential supply disruptions from escalating tensions in the Middle East flare up. Israel's assassination of Hezbollah leader has further inflamed tensions in the Middle East and intensified the war at its border with Lebanon. SEBI board will meet today to discuss strengthening of index derivatives framework. Reports suggest that the launch of performance validation agency will also be closely tracked. Now, although the Sensex and Nifty broke its 6-day bull run in the previous trading session, but it still managed to extend its third week of straight gains. Now, we have been seeing in the previous trading session and in the recent past trading sessions also, we have been seeing that a more action has been towards the large caps away from mid and small caps. So we will be navigating what your trading strategy should be at this point of time later in the segment also. But this week, starting from tomorrow, we will be having auto sales figures trickle in. So we will see how the auto pack performs given that Nifty Auto Index also hit an all-time high in the previous trading session. We will also be watching out on how IT stocks have performed, given in the last session we saw the index rising as much as 3% after Accenture's upped its revenue guidance for 2025. Now today, it will be the final trading day of the quarter. After this, the companies will be starting reporting their business updates for the period gone by. That will also act as a key trigger to understand where the Nifty moves. But so far this September, the benchmarks have already gained 4% each. So it looks like that we will be ending on a high note, but we will see how the markets pan out in today's trading session as well. Now, if you look at the option Qs data, Nifty put call ratio fell to 1.16 from 1.37 levels. It has raised questions if it is time for some consolidation. We saw that Friday also was a little bit of consolidation and a pullback that we saw, but we'll see whether or not there is an extension of it as well. Now, in the F&O ban list, there were new additions, nor were there any retention. If you look at the fund flows data, foreign institutional investors, they once again sold the stocks worth 1,209 crore rupees in the cash markets, while domestic institutional investors, they bought nearly 7,000 crore rupees in the cash markets. So, despite the FII lull that we saw in the previous trading session, so far this month, FIs have already pumped over 57,000 crore rupees. So this figure has been the highest so far this year. So now just a couple of minutes before the opening bell, we can see some of the pre-open rates. We can see that, in the pre-open also Nifty has, dropped about 100 points, and the Sensex is still about 300 points lower as well. But we will be addressing that. Let's see how the markets pan out just a couple of minutes before the opening bell. But on that note, let's get on board with our technical expert of this show, Aamar Singh, Senior Vice President of Angel One. Aamar, so good to have you on the show. Good morning.
Yeah, very good morning, and thank you for having me on the show.
Aamar, let me begin by asking you an overview of the markets. We saw a breather in the last session, but is Nifty further uptrend is possible? Today we are seeing a little bit of a consolidation in the opening in the pre-open rates. But can we attain the 26,500 mark, or is there some consolidation on the horizon?
See, if you look at the markets, technically they are definitely continue to remain strong and firm, and also most of the I would say broader indicators in terms of stocks trading over the 200-day moving average, that continues to remain strong. So basically the trend is up and it's quite strong. And also what we've seen is that the bears have gone in for a retreat. So that's the reason we've seen this sort of sharp rally in the last few days. But the recent developments in Middle East means the chances of it really going out of or spinning out of control, that is quite remote. But maybe that could be a slight cause of concern. But overall, the trend is still strong. So effectively, it means is that dips should be looked as buying opportunities. If you look at the support level somewhere around 25,000, 25,800, 900, that's a 800 to 850. That's a very strong support zone. So in case we do witness some pullback, that can be a very good buying opportunity level. On the upside, Nifty seems to be capped, or resistance is around 26,250, 300 zone. But we are not seeing any trend change. Also, if you look at the derivatives data, that's more or less mixed. As you rightly said, if you look at the 3rd October expiry, so the PCR is somewhere around 1.06. So it's quite evenly balanced between the buyers and the sellers from that perspective. But still, we'll have to wait and watch as to how the global markets react going forward with the recent developments that have happened in Middle East, because that could lead to some escalation, quite possible.
Okay. Some escalation possible because of the pre-open, but just a couple of minutes before we hit the opening bell. So before that, just 2 seconds away. We're just 2 seconds away from the opening bell. Okay, so first rates coming on your screen. Let's see how the Sensex and Nifty have performed. We can see that there is a little bit of a pullback in today's trading session as well. We can see the extension of the fall from Friday's trading session. We are seeing that Sensex is already down about 200 points, 250 points. Nifty is also down about 26,107 levels. Right on your screen, it is about, it's trading flat in red. But other than that, we can see some of the sectoral indices that we are seeing action in the action. Nifty Metal Index, it's still performing well. It is up about 1% in trade today. And we saw over the weekend that, China has announced even more stimulus measures to rejig its economy as well. And it has announced that, all the mortgage rates that they have been cut, they can be effective from October 31 itself. But Nifty Metal Index once again performing well. But other than that, we are seeing Nifty Bank once again. In the previous trading session, we saw 1% decline in Bank Nifty Index. Today also it is down about 0.3% in trade. Auto Index is also not doing quite well. It is about 0.8% down as well. But among the top gainers on the Nifty, we can see JSW Steel, NTPC, Hindalco, Tata Steel, BPCL. These are some of the top gainers in the list that is doing well. We can see, we can see that the gainers list has been dominating by the metal plays once again. But among the top losers, we are seeing Hero MotoCorp. Hero MotoCorp, I think this is the third straight session for Hero MotoCorp after UBS gave its sell rating on the stock, indicating that there is certain market share erosion for the company against other two-wheeler players. Other than that, we can see Tech Mahindra, Nestle, Infosys, M&M, all of them in the top losers of Nifty 50 list. But Aamar, today we are seeing once again Bank Nifty, it has declined and it saw a decline in the last session. Today also it has not been performing well. But so what are the new levels for this week for Bank Nifty index?
Yeah, so if you look at Bank Nifty in particular, we've seen some upside move on the back of some very good moves by, I would say, HDFC Bank or ICICI Bank. But currently, Bank Nifty is meeting with some sort of very strong resistance coming around at the higher levels, because it's the resistance which I see somewhere around 54,400 to 500 zone. Whereas support for Bank Nifty is somewhere around 53,000. It's very crucial, around very crucial support zones right now. So on the downside, I would say 53,200, 250. That's a very strong support zone. Is currently almost to 300 points higher from those levels, and it's approaching a very crucial moving average. So from that perspective, we could expect some pullback. So Bank Nifty ideally needs to stay above the 53,300 level for any, I would say, the trend to continue. Otherwise, we could witness some trend change from a short-term perspective. And also, we'll have to watch out for how HDFC performs, because that has got the maximum weightage in Bank Nifty. Until the time we don't see HDFC Bank sustaining above the 1770, 1780 levels, or probably 1800 level, we could say that there could be a cap move in Bank Nifty as well.
Okay. All right, HDFC, a clear, indicator of how the Bank Nifty will be performing as well. But broader markets, Aamar, we are seeing that, there is a clear shift in the pattern of mid caps and small caps to large caps as well. So what do the chart patterns of Nifty mid cap and Nifty small cap hint at?
So if we look at Nifty small cap, so if I look at the Nifty small cap, we are currently, this is Nifty small cap has been consolidating for quite some time. And also what's happening is that a lot of money, or I would say risk appetite, is moving towards large cap. So that is quite evident in the way Nifty has performed over the past few weeks. And if you look at the Nifty mid cap in particular, if I look at the Nifty mid cap, that is comparatively slightly better placed as compared to the small cap. But all these, I would say, be the Nifty mid cap or the small cap, they are definitely showing signs of fatigue. So effectively, it means is that higher levels would be, for all these stocks, would be met with selling pressure or profit booking. So one needs to be really careful in the mid cap and small cap in the short term.
Okay, so can we see a more selling pressure to build on from here on as well in the October series?
Markets were looking for some fresh triggers. So one got that from the, I would say, US Federal Fed rate cut, but again, too many rate cuts too fast, too soon also would also imply that the US might be heading in for recession. So it cuts both ways. So again, and we have still a couple of months, and we have the US presidential election. So overall markets globally are positive. There's no doubt about it. Chinese markets have also started firming up. That's the reason we are seeing some very strong moves in the metal space because of the Chinese stimulus packages. But we'll have to wait and watch whether the markets sustain at the current levels. But the overall trend, there's no trend change. So I would still say that the favor is in being with the bulls rather than being with the bears.
Okay. So the bull trend is expected to continue as well. The momentum is expected to stay. But some of the stock in focus, Biocon and Lupin, both the companies have received observations from the US FDA post-inspection. Biocon has received 4 observations for its API facility in Bangalore, while Lupin has also got 6 observations for its Pithampur facility. But on the charts, Aamar, both these stocks haven't really performed well in the past month as well. So can we see further pressure building onto these stocks as well?
First talking about Biocon clearly on the intermediate term trend, short term trend, the top has been definitely made, because if you look at the stock in the second week of September, it had made almost close to 394, 395 levels. Currently, it's corrected by almost 10%. If I look at the intermediate term trend, that also isn't very strong. Long-term trend, however, remains strong and firm for Biocon. So effectively, what it means is that any pullback in the stock towards 340 odd levels, that can be a good buying opportunity, at least around 367. So any further 5% correction can be a buying opportunity in Biocon. But one needs to remember that the trend is no longer a strong trend, or momentum is no longer there in Biocon from the intermediate term trend perspective. Looking at Lupin, Lupin also what we are seeing is that the long-term, intermediate-term trend, this is better as compared to Biocon on the charts. So, but Lupin on the short-term charts clearly shows or points towards consolidation. So it's good from a trading perspective. If you ask me, on the downside, the stock has got good support coming around the 2100, 2150 zone. But again, on the upside, the stock is somewhat a resistance around 2200, 2280, 2300. So it's from a trading perspective, it's a very good stock between 21 and 2300 because the long-term trend continues to remain strong and firm. Intermediate-term trend is also very strong. Short-term, we are seeing some sort of consolidation. So from a trading perspective, it's a good stock. Don't expect any major rally until unless it reaches the 2300.
Okay, all right. But diving straight into our viewer queries, let's take the first stock in focus. Trent, Debu K has been asking his views on the trend. So Trent, Aamar, how does it look on the charts? You know, we have seen quite a stellar run for Trent as well in this so far this year as well. And Trent, from today onwards, it will also be trading at in the Nifty 50 index as well. But on the charts for the short term, Aamar, how does it look like?
See, Trent is one stock, I would say, really defying all laws of gravity. The way the stock has rallied in this quarter itself, the stock is up almost 42%. And it has been I would say, really a super wealth creator in that sense. And also what we are seeing is that on 27th of September, the stock witnessed significant volumes that day. And so that could mean that a lot of buying, selling has happened at those levels. So somewhere on the upside, 7950, 8000, that's a level for resistance. On the downside, the stock has got support coming on the 75, 7600 level. See, entering at the current levels, I really wouldn't recommend because the risk-reward ratio might not be very favorable. But at the same time, I would like to say that the stock is extremely strong on the long-term and intermediate-term trend. Effectively, what it means is that any pullback or correction is a buying opportunity in the stock. There is no trend change visible as of now in Trent.
Okay, so no visible trend reversal in Trent as well. But another stock in focus, Vijay has been asking his views on Ola Electric. Ola Electric, Aamar, it was listed flat in the trade when it was listed, but then it saw over 100% increase later in the days. But today it has been trading at 100 rupees once again. And now it looks like, you know, it's coming off its highs from 157, from 150 levels to 100. Ola Electric, what does it look like for the short-term prospect?
See, Ola Electric, it was more of euphoria rather than anything else because post its listing, the stock rallied by almost 100% and then it has corrected. Because if you look at the financials of the company is in losses and we really don't know when the company is going to turn around. But since EV is very much into, I would say, the talk, and investors and market participants look at EV as a future. So they look at the company from that perspective, but ultimately it's the bottom line, how the company really shapes up. So I think that's the reason the euphoria seems to have died down and also some profit booking is happening in the stock. So I wouldn't read much into it unless we see the performance of the company, because this quarter, the June quarter also, the company had ended with a loss of 347 crores. So till the time we see a turn around there, the stock could witness a movement either ways.
All right. So a range-bound movement expected for Ola Electric as well. But another query dropping in from Vinil Reddy. He's asking his views on Bajaj Auto. Bajaj Auto, Aamar, the stock has been hitting consecutive record highs in recent days as well. And, you know, after its CNG bike initiative also, you know, launched in the markets, the world's first CNG bike. But how does Bajaj Auto look like in the charts? Can we see certain consolidation in the coming sessions, or the stock bullish momentum is expected to continue as well?
See, if you look at Bajaj Auto, very strong on the long term, on the intermediate term trend. Short term trend is also very strong and positive. But some of the technical indicators, one of the technical indicators clearly points towards overheating in the stock. But despite that, the stock isn't really correcting. So what it effectively means is that since the trend is very strong, any correction is a buying opportunity. In Bajaj Auto, there's no trend change. But since some of the technical indicators are extremely overheated and they point towards that maybe we could witness some consolidation, if not a correction in the stock. So one shouldn't get into Bajaj Auto at the current levels. Only on correction one should look at. But the key is that the stock isn't really correcting much. On the downside, the stock has got support coming on the 12,100 to 200. That's an immediate zone of support for the stock. So that's a level where one can keep a close watch on from a trading perspective.
All right, a close watch warranted on Bajaj Auto. But another stock in focus, Shyam Gore, he's asking about views on Amara Raja batteries. Amara Raja on the stock, 1 month it has not performed well, Amar. But how do we see for the short term as well? Because the company has also outlined certain capacity expansion plans as well. So how does it look like on charts for the short term?
So if we look at Amara Raja batteries here, see the stock has corrected significantly. The stock witnessed a significant rally from almost 700 levels to 1780, and then it has corrected towards 1359, 1360. So if I look at the long term trend is though strong and positive. Intermediate term trend, we've seen the stock moving into oversold territory. The stock has got good support coming around the 1300 level. So currently it's around 1360 odd levels. So post the sharp correction, the stock is trying to pick a bottom. For any meaningful rally, the stock needs to sustain above the 1430 level. So 1430, currently it's around 1360. So sustaining above the 1400, 1430 level is very important for any trend change. Because the long-term trend though is strong, but on the intermediate term and the short-term trend, they continue to remain bearish. That's the reason we could witness some consolidation. But lower levels can be a buying opportunity. As long as it doesn't breach the 1300 level, I don't think there's much cause of concern. Trading consistently below 1300, then the stock could witness some sharp correction. So I would say above 1430, the stock could witness an upside rally towards 1500, 15.
Okay, 1550, that is the level that you need to watch out for Amara Raja. But coming to another query, Jiffin is asking his view on Rishabh Instruments. Amar, Rishabh Instruments, it has not been performing well in the past 1 month also. It has given a mildly flat green returns, and as well as 6-month charts also suggest about a 18% downtick. But Rishabh Instruments, do we expect the bearish trend to take a reversal, or do we expect the pressure to build on from here on as well?
So if we look at this particular stock, I don't actually track this, but I'll just pull it up on the charts. So as you rightly said, the stock has corrected significantly from almost 635 levels in February, and currently it's at 348, 374, having made a low of 348. The stock has bounced back, but overall, till the time it doesn't breach the 400 level, I won't say that the trend has changed. Sustaining above 400 is something which is very important. Then the stock could witness some rally towards 450, 460 odd levels. Because if you look at the trend for the stock continues to remain bearish, and only above 400 we could say that the trend has changed from a short-term perspective.
All right, that is coming in for Rishabh Instruments. But another stock in focus is Alex. Alex is asking his view on Blue Dart. He's asking the support levels for Blue Dart. Blue Dart on the charts, past 1 month, Amar, it has not performed well. But if we look at the 6 months charts, it is given about like 30% returns. So do we expect there should be a breakout in the charts for Blue Dart in the short term?
See, I would say it seems to be that the rally in Blue Dart seems to be over as of now. The stock on 17 September had witnessed a major, I would say, upside move, and also that was also on significant volumes, more than, I would say, 10x the volumes which it sees on the average days. From that perspective, it appears that the stock is now going in for consolidation. The stock has got good support coming around the 8,000 odd levels. So current levels are good support level, but till the time we don't see the stock sustaining over the 8,300, 8,350 zone, it could be in for consolidation. But if you look at the charts, intermediate term charts, they point towards consolidation in this particular stock.
All right, consolidation in line for the stock. But Ark is asking his views on REC. He's asking like how long will it have this kind of a run? Basically, it is, for the past 1 month, it is, seen about a 10% downtick. So he's asking, whether he should exit or hold right now. REC on the charts, Aamar, how does it look like?
See, REC on the charts has taken strong support around the 500 level. So till the time we don't see a breach below the 500, 510 level, I don't think there's much cause of a worry because the long-term trend remains positive. However, the structure on the intermediate-term trend, that is on the weekly charts, that has weakened significantly. So what we are likely to see is we could witness some consolidation, some choppy trading sessions. On the upside, REC seems to be capped around the 570, 580 zone. So that's a level REC will run into resistance. Only sustaining above the 580 level, could you expect some rally towards 615, 620 odd levels. But now REC is not in a very strong trend. So effectively, it means it's more from a trading perspective, you can look at the stock.
All right, from a trading perspective, we can look at the stock for REC. But Shrivardhan Gupta, he is asking his views on Goldium International. So he's basically holding like 2,500 shares at the price of 180 rupees. Goldium International, Aamar, how does it look out on the charts? Because in the last month, in the month of August, we saw the stock also hitting about like 20% upper circuit. But in the recent days, it has cooled off as well. So how does it look like on the charts as well? Today also it's down about like 2% in the trading session.
Yeah, I would say if you look at Goldium International, the stock has rallied significantly. See, if you see in July, the stock was, the low was 160. Currently, it's around 360 after making a high of almost 400 levels. So the stock has witnessed a significant rally. And also, if you look at the stock is still trading close to its record highs, slightly there. And on the daily charts, it's clearly showing that there is consolidation on the charts. But again, it points towards that lower levels can be a buying opportunity towards 330 odd levels. That's a very good support for the stock. Any pullback towards those levels can be a buying opportunity, and we could witness a move towards the 370, 380 levels because the long term and the intermediate term trend remains strong. Short term, we are seeing some sort of consolidation. But buying at the current levels isn't recommended.
Okay, so buying at the current levels not recommended for Goldium International. Aamar, just a final question. What are your trading picks? We have seen, quite an expensive market, but at this point, what are favorable buys?
I would say, see, metals, they continue to remain strong and positive. So I'm bullish there on the metals. Tata Steel is one stock one can keep a close watch on. Sustaining over the 144, 145 is important. Currently, it's around 142 odd levels. So breaching 144, 145 can be a good opportunity. The stock could rally towards the 154, 155 levels, means we could witness a 7 to 8% rally from that levels. And the stock has got good support coming below the 139. So one can keep a close watch on the metal stocks.
All right. Metal stocks, a close watch. We have seen quite a rally in the recent days as well. But thank you, Aamar. Thank you for joining the show. Thank you for taking out time. I hope to connect you soon as well. All right, let's take a check at the market, and we'll be soon joining our fundamental guest of the show as well. So Sensex and Nifty, they are again down. Sensex is down about like 400 points, 450 points down. Nifty is also down by about over 100 points as well. Among the sectoral indices, what seems to be doing well is the metal pack. Nifty metal once again the outlier among the other sectoral indices. We can see India Wix. India Wix has spiked up in trade. We saw quite a cool off in the past two trading sessions, but today it is up about 6% and it is trading at the level of 12. in the trading session as well. What seems not to be holding well is the auto pack. Nifty Auto Index is down about 1%. We saw in the previous trading session that it had hit an all-time high, but today is not doing well. Starting from tomorrow, we will also be seeing the auto sales figures coming in. So we'll see whether or not what kind of trends emerge as well. We have festive season coming in as well. So we'll see how the auto pack and auto players perform. Bank Nifty is also not doing well. It is down about like 0.6% as well. FMCG looks like it is trying to hold up with a little bit of gains. It is up about flatly in green as well. But otherwise, most of the sectoral indices, they have been trading in the red. Top gainers also still dominate the metal names. The likes of Tata Steel, Hindalco, JSW Steel among the top Nifty 50 gainers. But on that note, let's come to our next guest of the show. To understand what your trading strategy should be at this point. Joining me is Nikhil Oswal, founder and director, Finterest Capital. Nikhil, so good to have you on the show.
Thank you so much. Good morning.
Okay, Nikhil, let's start with an overview of the market. Everybody's talking that someday we're going to have a correction, to make the markets healthy. But the timing is a critical one, because the question is when. When do we expect this to happen? A little bit of a consolidation to make the overall markets healthy.
So right now we are in the most ironic stage in the market. The Nifty and your all the indices, major indices are making all-time high, but your stocks are not moving. The portfolio is not performing that well. The money that is supposed to be made is not as much we were seeing in last few months. So money making is going to be difficult from here on. Investors should definitely reduce their return expectation from here on. There is a huge sector rotation that is happening, and of course we must be in that right corner of the bull market where the stock specific action is going on, where the earnings are really strong. I do expect some consolidation on the index level from here on, and majorly some of the small and mid caps have already reached evaluations where they have discounted earnings of next 2-3 years already. So yeah.
All right, earnings have been discounted for 2-3 years already. But Nikhil, FIIs, they have been big buyers so far this month. Now that China has announced stimulus measures, they have also started their rate cut path as well to rejig its economy. Do you expect their attention to get diverted? Because we have as you rightly pointed out, that we have become quite expensive as well and discounting earnings for about like 2-3 years as well.
Correct. So to be very honest, if we see the figures of FIIs of last 2 years, they have been net sellers. The entire rally that we have seen that has happened over the last 2 years, it has been strongly participated by DIs and retail participation. Last month itself, FIs have bought nearly $3 billion of infusion into Indian markets, and now the rate cut cycles have just started. So we feel that the FII buying is going to continue for sure. Markets, see, a lot of funds, PMSs are right now sitting on cash. The mutual fund is holding 1.5 lakh crores of cash. Many funds like you can say like Quants or SBI, they are all on 15-20% of cash. So everyone is waiting for a fall, and markets ideally do not fall when everyone wants it to fall. But of course there is a froth, and the valuations are somewhere where everyone is not comfortable buying. And of course at the same time there will be buying on dips from every corner of the market, be it retailers, FIs, or funds infusion.
All right, so there could be a little bit of a hiccup in the market as well, as you said. But how does oil prospects look like? We have seen that the tensions in the Middle East, they have flared up, and we saw Israel's attack on Hezbollah chief and Beirut attacks as well. But how do oil prices look like? Oil, and as well as if you look at safe haven assets like gold on that level.
So, we do not really, focus a lot on macro because, macro is something that is, we take it as an opportunity for us. Anything that goes wrong globally is indirectly going to benefit India. And, right now, as we say, there are tensions in, Middle East, Israel attacking, the other countries and everything. But, it has nothing to do with Indian companies, and oil falling down is definitely positive for us, but beyond the point it is a sign of recession as well. So there is a sign of worry. Definitely it will make market a bit nervous about the fact that oil, if falls below 70-65 dollars, it is a sign of worry to understand whether a recession is coming or no. But at the end of the day, it is very positive for India. It will reduce our fiscal deficit largely. And this is what we want, right? The dollar index has come near about 100 levels now. So this is what will help equity outperform. Your metals are showing a sign that since the dollar index has come to 100 levels, your metals are outperforming. They're breaking out. The large flow is coming into metals also, and at the same time the gold is also performing well. So if you want to really play the gold, you rather play the jewelry businesses, which are doing fantastic. Ever since the government has reduced a duty in interim budget, it is positive for jewelry businesses.
Okay, all right, positive for the jewelry business. But Nikhil, you pointed out that we have been discounting earnings, which is like 2-3 years as well. But if you look at the previous quarter, we ended on a mixed note. We saw a dwindling of corporate profits, to pandemic low as well. So, do you see some sequential improvement from the second quarter, from second quarter onwards? And which sectors are expected to stand out in Q2 if you had to pick out any themes?
We are largely focusing on the sectors where the earnings are improving. See, understand one thing: the money is not going to go out of the market. That the flow that we are seeing today is not going to go out of the market. It is going to get rotated into a new sector where the earnings are stronger, the earnings are expanding. Like the sectors which were not performing earlier, like IT, pharma, chemicals, they were not doing that well. The entire sectors that have moved in last 2 years are your PSUs, defense, and your railways, and all of these. So the money that is going to come out and going to be infused into chemical and pharma. We are more bullish on chemical and pharma sector. The earnings over there have shown some sign of improvement as well, and we have bet on some of the ideas definitely in that sector. So some capex is going on. There's a improvement in prices of chemicals as well, where the spreads are going to get better from here on. And I mean, it's a game of spreads, and if you understand the spreads very well, definitely you can play this cycle.
Okay, but pharma sector that you pointed out, we are seeing a little bit of an economic slowdown in US as well, and majority of the Indian pharma companies, they have a substantial exposure to US markets as well. So pharma companies, do you expect that the revival is going to stay from here on?
So if you see on earnings, last 2 years, the pharma earnings had peaked in 2021, majorly post COVID, and after that they have not really performed and not able to break that large base of earnings that they had achieved. So since they have a small base from here on, see, everything, the markets are going to be bottoming out way before the real ground level bottom happens. So we are seeing some buying and some differentiation that is happening on the screen as well, with respect to pharma. Whether or not there is slowdown, but some companies are doing fantastic. Like you can say, like Natco Pharma, your Biocon, Marksans Pharma, Copran. We have invested in these companies, and they've done very well for us. They've moved 50%, 100% in last 1 or 2 quarters.
Okay, all right. But like holistically, if we look like for the broader markets, now that we are focusing on broader markets, that we have seen a bit of a correction in recent days. We are seeing a clear shift to large caps from mid caps and small caps as well. So do you expect that these stocks are expected to underperform from here on as well?
Yes, definitely. At least for some time right now, until the froth doesn't settle. Because see, shifting from mid cap or small cap to large cap is ideally it ideally makes sense, because there are more volumes. The large money, the smart money would want to move towards a better volume area, where they can get an easy exit at the time of mayhem or correction. Because somewhere. The exit is very important at the end of the day. And ideally, small and mid caps, they move very fast and make better returns than large caps, and they have done in last 18 months already. So the market has already sustained for more than 18 months now, and it's time for some correction. So let me tell you one data. It's very interesting to know that out of 6,000, 5,000, 6,000 listed companies, if you put a screen of 20% correction from the top, there are already 2,000, more than 2,000 companies that have fallen from the top, more than 20%. So one third of the market has already fallen 20%, and nobody's realizing it. Whenever a stock falls 20% from the top, it is said to be coming in a bear, zone, or maybe a time correction zone. So you need to be very sure about the earnings, where you are, what you are invested into. If you are not into earning specific stock, make sure you will have to marry that stock forever.
All right, marry that stock forever. But a final question, which sectors are you currently overweight or underweight on? We've seen successive rallies as well. So what appears attractive at this point of time?
So, I mean, as I mentioned, the sectors which are more under-owned, where the money is going to flow, like chemicals, like pharma, some of the stocks which are export oriented. We are focusing on export theme as well, because that is going to become very large from here on. But if we talk about 2030, a lot of sectors are going to see a huge expansion in exports, like electronic manufacturing, your defense. So that is where we are focusing. And the government is pushing over there. At the end of the day, if the GDP wants to go towards $5 trillion, $7 trillion economy, the export needs to be increased from here on, massively. So we are focusing over there. And the ideas that we are invested are purely based on the earnings. There is nothing that we don't buy on a hope story. I mean, there's nothing we buy on a hope story. It's all about pure earnings.
Okay, pure earnings play. Export-oriented themes, pharma, EMS, all of these need to be watched out. But thank you, Nikhil. Thank you for your time. We hope to connect with you soon.
Thank you so much. Thank you so much.
Okay, all right. Okay, with that, we have come to an end of the segment, but otherwise, we can see a deeper fall in the markets as well. Sensex down about 600 points. Nifty is also down like over 150 points as well. What seems to be doing well, once again, is the Nifty Metal Index. And otherwise, majority of the sectors have been trading in the red as well. Among top gainers, still we have Hindalco, JSW Steel, Tata Steel, some of the metal names dominating the list as well. And among the top losers, Hero MotoCorp. Once again, Hero MotoCorp, an extension of the fall. It is down about like 3% in trade. Other than that, we have BEL down about 2% in trade. From today onwards, we can see that BEL has been trading in the Nifty 50 index, but today it has been down about like 2% in trade as well. We'll be watching out more. But with that, we've come to an end of this segment. But don't forget to tune in to 3:30 p.m. for closing bell. We will be discussing about how the markets have developed and what are the stocks in focus as well. But until then, signing off.